Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Monday, the 15th of December. I'm starting off with Craven House Capital, where it looks as though we've got the aftermath of a early December bear trap below the 0.3 pence level and also below September support around 0.35 pence. The view now is that we have a possible reversion to the sort of with it back within this rising trend channel from the end of last year. The floor of the channel currently running around the 0.35 pence level. Upside as a best case scenario over the next couple of months up to the late 2013 resistance line, 0.8 pence, and really if we can hold above 0.35 pence over the course of this week, you'd be more than or reasonably confident that further gains could be seen at least towards the 0.55 pence 2014 resistance zone that we've already seen in the post-April period. After this, we're looking at a stock which has been encouraging in terms of its technical configuration over the last few sessions, and it comes in the form of RapidCloud International. It looks as though we've got a bull flag here resting on the 50-day moving average of 44 pence. Share price currently at 50 pence, so that gives us a reasonable risk reward buy opportunity with a natural stop loss at the 50-day line. We've also seen a bounce off neutral RSI 50, which is normally a good sign as well. So the view at the moment is that traders will be going long towards current levels and looking for a top of 2014 price channel target as high as 70 pence while the 50-day line is held, so risking around 5 pence to make 20. Next up is a stock which probably angels would fear to tread near to at the moment. Obviously, petroleum is not one of the hottest areas of the market at the moment, and also shares of Roxi were up 65% on Friday, so it doesn't feel too clever going long in the wake of that. But the technical configuration here is interesting. The rebound this month was above the floor of the July gap to the upside, which started the big rally from July to September. So that is a plus. And it also seems that we're back within the July trend channel, which has its base around the 9 pence level. As well, so that is an added bonus too. If you're cautious, maybe you wait for a break above the 200-day moving average at 10 pence before going long, or RSI 50 plus versus 46 at the moment. But aggressive traders would be following the recent rebound and remaining long while there's no end of day close back below 7.66 pence, which is the 10-day moving average, the 10-day line actually trading stop loss on the bull argument. Obviously, the upside, if all goes according to plan, would be a retest of the 20 to 25 pence resistance zone of 2014 to date. But as I said, given the nature of this stock in the sector, one would want to enforce a stop loss from the 10-day line quite strictly. Finishing off with a stock which doesn't look quite so fraught, and that's Surgical Innovations. We've also already seen a gap reversal, rounded saucer-shaped reversal here over the last couple of months. This is looking quite encouraging, even though the shares are up a lot already. The RSI is 89. There could be a little bit more here on the upside, maybe filling the gap up to 4 pence plus, or hitting the top of the July rising trend channel towards 4.75 pence over the next few weeks. The stop loss on the buy argument around 2.5 pence, which was former October resistance. And obviously, given how overbought the shares are at the moment, you'd either be looking to enforce the stop loss just below that level if the shares are pulled back that far. But in the meantime, any dips towards that area, say sub 3 pence, would be regarded as a buying opportunity for one final leg to the upside. That's it from me. More updates at spreadbetmagazine.com.